Section 55 addresses an important gap in legislation regarding how the annual tax on enveloped dwellings, ATED, applies to alternative property finance arrangements in Wales, with changes effective from the 30th of October 2024. ATED is an annual tax applicable to companies, partnerships with corporate members, and collective investment vehicles that own UK residential properties valued above £500,000. The legislative amendment was necessary because the previous ATED rules for Wales were based on sections of the Finance Act 2003 relating to stamp duty land tax, which were repealed following tax devolution to Wales. The key change is the insertion of a new Section 157B to specifically cover alternative property finance arrangements for land in Wales, while Section 157 of the Finance Act 2013 now applies exclusively to arrangements for land in England and Northern Ireland. Alternative finance arrangements, commonly used in Islamic finance but available to anyone, involve a financial institution purchasing property on behalf of a client and leasing it back, rather than charging interest. Under these new provisions, when a financial institution purchases a dwelling in Wales under an alternative finance arrangement, the client, lessee, is treated as the owner for ATED purposes. This means any ATED liability falls on the client rather than the financial institution, but only if the client would have been liable had they purchased the property directly. The rules also apply to partnerships with company members and collective investment schemes, with special provisions for cases where an individual client dies. This amendment ensures alternative finance arrangements in Wales receive the same tax treatment as in the rest of the UK, creating a fair approach across different financing models despite their structural differences.